Welcome back to our weekly sector review, where we dive deep into the market capitalization movements from July 28th to August 1st, 2025. Today, we're going to unpack the latest trends that are shaping the financial landscape. Buckle up, because we've got some fascinating developments to explore across all major sectors. Let's kick things off with the basic materials sector, which demonstrated moderate growth this week. Industry leaders like Newmont and Agnico Eagle Mines posted impressive gains, contributing to an overall positive shift in the sector's market cap. We observed a 3.8% increase, translating to a substantial market capitalization change of $28 billion. Notably, a bullish engulfing pattern formed on Wednesday, signaling a potential reversal of the previous downtrend. This uptick reflects ongoing demand in core commodities and industrial resources, buoyed by stronger industrial production indicators and a rebound in global demand. Shifting our focus to the communication services sector, we saw maintained momentum with above-average growth. This sector's performance was primarily powered by the financial results of leading tech and media companies. The market responded favorably to earnings reports, with major players in streaming and social media platforms driving significant market cap increases. A particularly strong rally occurred during Thursday's trading session, pushing the sector to new highs for the week. The consumer cyclical sector experienced volatility due to mixed earnings reports. While strong consumer confidence supported retail and discretionary companies, certain segments underperformed. We witnessed a sector-wide market cap fluctuation of 2.5%, equivalent to approximately $18 billion. The most significant price action occurred in the first 2 hours of trading on Tuesday. The sharp decline followed by a gradual recovery throughout the week. In contrast, the consumer defensive sector remained steady, acting as a safe haven amid trade policy uncertainty and inflation concerns. These defensive stocks preserved margins despite modest revenue growth. The sector saw a slight increase of 1.2% in market capitalization, amounting to roughly $9 billion. A notable doji candlestick pattern formed on Friday, indicating potential indecision in the market and setting the stage for next week's movements. The energy sector benefited from stable oil prices and ongoing supply concerns, leading to moderate gains in market capitalization. We observed a 2.7% increase, equating to approximately $22 billion. A series of higher lows throughout the week formed an ascending triangle pattern, suggesting a possible breakout in the coming days. The sector hit its weekly high during the last hour of trading on Friday, riding on positive sentiment from OPEC Plus announcements. Financial services experienced strong capitalization movements, driven by higher trading activity supported by earnings releases and resilient economic data. The sector posted a robust 4.5% gain in market cap, translating to an impressive $35 billion increase. A golden cross pattern emerged on the daily chart on Wednesday, typically a bullish signal that could indicate further upside potential. The healthcare sector saw robust earnings fuel growth, although valuations remain sensitive to regulatory changes and ongoing innovation trends. We recorded a 3.2% uptick in market capitalization, representing about $25 billion. A notable hammer candlestick formed on Monday's session, successfully defending against early week selling pressure and setting the tone for the subsequent rally. Industrials led the weekly gains due to upbeat manufacturing indicators and expectations for trade improvements. Core durable goods orders were also up, boosting sector confidence. The sector experienced a significant 5.1% surge in market cap, equivalent to approximately $40 billion. A bullish Marubozu candlestick on Thursday's chart emphasized the strong buying pressure. With the sector reaching its peak during the final hour of trading, the real estate market held firm despite headwinds, with certain subsectors outperforming on stable fundamentals. We saw a modest 1.8% increase in market capitalization, amounting to roughly $12 billion. A morning star pattern formed early in the week, successfully predicting the subsequent upward movement and providing a solid foundation for growth. Technology remained a key driver of market cap growth, thanks to blockbuster earnings from major players and optimism around AI and cloud adoption. The sector posted an impressive 6.2% gain, translating to a staggering $55 billion increase in market capitalization. A cup and handle pattern completed on Wednesday's chart, triggering a strong breakout that continued through the end of the week. The utilities sector showed resilience and stability, capturing investor attention as a defensive option during economic uncertainties. We observed a steady 2.1% rise in market cap, representing approximately $15 billion. A series of inside bar candlesticks throughout the week indicated consolidation. It's potentially setting up for a significant move in the coming sessions, while public data is less available for private companies. Sentiment and deal activity reflected optimism, with capital flows favoring innovation-focused ventures. Estimated private market valuations saw an uptick of around 3.5%. Based on available data and industry reports, the most significant movements were observed in late-stage startups preparing for potential IPOs, with several high-profile funding rounds closing during the week. In summary, this week's sector review reveals a dynamic market landscape with varied performance across industries. The basic materials and industrial sectors showed particular strength, benefiting from improved global demand and positive economic indicators. Technology continued its dominant run, while defensive sectors like consumer defensive and utilities provided stability in an uncertain environment for investors and financial professionals. Understanding these weekly sector shifts in market capitalization is critical for portfolio management and sector rotation strategies. The patterns and trends we've observed this week could have significant implications for the coming trading sessions. As we look ahead, keep an eye on how these sector movements might influence broader market trends. Will the bullish signals in technology and industrials continue to drive overall market growth? How will the defensive sectors perform if economic uncertainties persist? These are the questions that will shape the market narrative in the coming weeks. Remember, the financial markets are constantly evolving, and staying informed is key to making sound investment decisions. That wraps up our weekly sector review for July 28th through August 1st, 2025. Until next week's breakdown of the latest market capitalization movements, stay tuned, stay informed, and happy investing. Thank you so much for watching. Hope this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, and subscribe to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes, and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is, and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.